Latin America has this huge potential, and if we wait for all the companies that the VCs have invested to do an exit, and therefore the LPs of those funds to reinvest in the ecosystem, it's going to be too late. We have too many things to do. We have too many big problems to solve. We needed to create some middle layers of capital, right? And when you create this middle layer of capital, it goes in many ways. When you provide it to funds, then funds provide money back to their LPs, and therefore their LPs reinvest back into the ecosystem. When you provide back to the angel goes back and reinvests in the ecosystem. Then when you provide to the founder, usually the founders, first they make sure their bases are covered, but then they invest as angel in other founders. So it's extremely positive circle which is generated with the secondary.
We are so grateful to be supported by these community champions: Sales MD, Team Friday, Realist Lab, Kiana Patterson, Diego Chavez, Jared Boucher, Heather Ryder, Janine Sua, Lily Roca, and Steve Kernan.
Hola, hello, hi, bienvenido, and welcome back. Or hey, maybe it's your first time. Welcome to Entrepreneurial Thinkers. As you may or may not know, this is the show where I get the absolute privilege to have weekly conversations with the best and brightest entrepreneurial thinkers across all sectors and segments of society and industry as we come together conversationally to try to leave this world a little bit better place than we found it. Today, I'm really excited, very grateful to be joined by my friend Antonia Rojas, who is the managing partner at Attom Capital. It's got 2 T's in it, so I'm probably going to pronounce it like Attom Capital all day, but that's just me. You don't have to say it that way. Let me tell you a little bit about Antonia before we get into it and welcome her to the show. She isn't just investing in startups. Like, Antonia is really helping to redesign how capital flows through Latin America and innovatively supporting how entrepreneurs finance their dreams and then in turn invest in their communities. She's a Kaufman Fellow, a former CIO, a former partner at one of Mexico's leading venture capital firms back then in the old days, known as All VP, and our friends that we know well, who are also alumnus of the show. She's a board member across multiple companies across a variety of different sectors and industries: fintech, SaaS, health tech, and prop tech. And she is now the co-founder and managing partner of Attom Capital, which is Latin America's first direct secondaries fund. And she's going to teach us exactly what that means today. But let me tell you, what makes her different, in my opinion, isn't just what she invests in. It's what she unlocks through her belief in entrepreneurs. She's a market reader and a people reader. She truly believes capital is oxygen and that when it gets trapped, ecosystems suffocate. So today we're talking about liquidity, long-term conviction, market dynamics, and what it really takes to build category-defining companies and ecosystems in Latin America. But what I really want us to come away from this conversation having learned is how some investors are thinking entrepreneurially about new ways to finance the growth of individual companies and ecosystems. And with that, I say with great pleasure to have my old longtime friend from Latin America join me here in this digital forum today. Welcome to Entrepreneurial Thinkers, Antonio. It's great to see you.
Thank you so much, Rob. That was an impressive intro. I want that intro for the future.
I tell you, I forewarned you that was likely what was going to happen. The greatest part about the intros that I always love to say back to you or any of our guests is it's really easy to write great intros of really interesting people who are doing interesting stuff, right? So that biography is you.
Thank you. You took it to the next level. I loved it. I really appreciate it.
It's our pleasure. So let's get into it. We've got a lot to cover today. And frankly, I'm going to be honest, I've got some stuff that I need you to teach me today, right? And our audience is going to learn through me as kind of their proxy today. So we're going to start out right away with kind of the most obvious question that's going to lay the baseline, I think, for the rest of our conversation, which is, first things first, like, I've been curious about this question for years, honestly, like way back before I ever met you. What is a direct secondary offering?
That's a great way to start. So there are different ways that you can partner with a company. You can invest in their primary rounds, which are usually the rounds that we hear in the news, when investors invest in the company, so the company uses that money for growth. And then there is another way that you can partner with a company, that is buying an existing shares of someone, right? So let's say you invested in a company, and then for whatever reason, you need some liquidity back, you need to get out of that company or whatever, then you can sell those shares to an investor, and that's a secondary investor, right? So it's a secondary transaction. It's not capital for the company, but is so the capital can flow within the shareholders of the company.
Hey, interesting. And now, your example that you just gave was me as this hypothetical, like external investor who
Mhm.
then, for some reason, wants to or needs to extract my capital or some part of my capital
But
from
it's
that company.
anyone in the cap table.
That's what I was just going to ask. So the
Right.
next, so then does this also apply to like,
To founders,
oh,
employees,
okay,
angels, funds, so anyone in the cap table. And there are infinite reasons why someone in the cap table may need the liquidity, right? Sometimes a founder has been, with the company for, 5 years and earning not that much salary, right? They haven't been able to buy their own house or something. And then they sell some of their shares in order to get some
okay,
liquidity. So it gives that's why I say it's oxygen, right? Because it
right.
allows you to stop worrying about, the immediate problems that you have and focus on building the company that you want to see in the next 12 years or 10 years,
Okay,
right?
so let's go into that a little bit deeper, right? So I'm curious, like you just teased a couple of examples, but let's talk about it maybe a bit more in the macro. Like, why
Yes.
is this secondary capital necessary? Like, why does the kind of previously existing array of capital that's out there and all these different types of resources that are available to entrepreneurs or executives, like why is that not enough
Yes.
to capitalize markets in like stable ways? So we heard the personal example, but like why in general do secondary offerings have to exist?
Okay, so let's break it down depending on who is selling, and so each can, depending on who is listening and where they are
Yeah.
coming from, So first, funds. Funds have a specific length that their funds need to be, right? That usually is 10, they can go to 12. So what if you're in an investment and you're at year 12 of that investment and that company hasn't exited or the founder doesn't want to exit at some point, right? And therefore, you can go for that liquidity option and sell to a secondary.
Hey.
So think about it as this sport where someone is running, and it passes the torch to the next one, right? So it's like you create like middle layers of capital within the entire journey of the founder. I mean of the company. And then, so that's on the fund level. Then on the angels level, usually the angels help at the beginnings of the journey,
Right.
right? And then they are kind of like passive investors. They rather have some liquidity and then invest in other companies so they can continue supporting and the flow can continue going, right? So that's very healthy for the ecosystem. Then the founders or the employees, sometimes it takes, 10 years for the company to exit. And then when you started the company, you were at one stage, maybe you weren't married yet, you didn't have family,
Yeah, 10,
right?
10 years is a long time to
It's
like
a
a
long
22-year-old, right?
Exactly. And like then later you're at another stage of your life and you need certain bases, to cover your grounds, which weren't the ones that when you started. So getting some of the table allows you to actually think in the future instead of selling sooner than expected. The same thing with employees. You get your salary, which many times can be lower than like same place in a corporate, right? But you're having your shares in the company which are appreciating over time, but you're not seeing the benefits. You're like, at one point, is this real or not? You know?
Right. Yes. Yeah. And that
So
and that one point conversation happens a lot more like in the last 5 or 6 years than it did
yes,
in the prior 20 years.
that's why it's so healthy that you're starting to see, that it's real, that the value that companies are creating is real. And like we need to create those stops in between so we can create this motivation and continue momentum.
Yeah. Interesting. You know what's fascinating about this? And as I was doing my research to prepare for this conversation, I had like this bifurcation in my mind. I was like, okay, present day, Rob, and I'm learning and I'm reading about Attom Capital, and I'm reading all your different posts and articles and different things that I could find about secondary
Thank
capital
you.
out there. And then I'm thinking to myself, like old Rob, whose first startup company in the software space was back in 1998, right? And I'm thinking to myself, like, wait a minute, like, and so maybe this is kind of a sub question here is, back in those days, to that employee or really to that entrepreneur or founder, the magical exit pathway to eventually monetize that capital exit for yourself
Yeah.
was this thing called an IPO, right?
Yes.
Which was an initial public offering, which even kind of the most random business adjacent person in the world, in the modern world, probably in Mexico or or in the US, like they kind of remember what an IPO was if they're of a certain generation. But what I'm hearing and from you today already, and what I saw when I was doing the research, it's like that market kind of almost doesn't exist anymore.
Yeah, it's been stagnant for a couple of years. And
Okay.
that's what we mean by them taking longer. So they are not, it's not that they are non-existent, right? It's just like they got like it is taking longer. So companies, the size that a company needs in order to go to IPO is like humongous, you know?
Right. Yeah.
So
And
that's
then
why,
the other alternative path, sorry to interrupt you, but I think it's to your point, right? Is the other alternative path, which again, like late 1990s, early internet 1.0,
uh,
IPO was the thing everybody chased because it was the thing, right? But then coming, say, post recession, like 2010-ish era, then it started to become acquisitions, right? So
yes.
then it's like, okay, we're building our company knowing that we're going to sell it, right,
Mhm.
someday, and then some big and has that slowed as well?
Um, so my perspective is in Latin America, and I actually have seen an uptick on
Okay,
acquisition lately. So when capital is scarce and you don't see a path for liquidity like in the IPO in the short term, then you start thinking, hey, maybe it's time to sell my company, right? And the reason why secondaries are kind of like a good oxygen in between, it's because it allows you to, okay, we can take it 5 more years, you know? Because otherwise it's like, I'd rather take the offer that I'm having right now to sell a company. Maybe it won't be the return the VCs want, but it's the return that I, as an entrepreneur, want, you
right.
know?
Or as you say, life circumstances have changed, and you've been at the game for a while, and you're like, I
Exactly.
like I kind of have no I have to take this. Like
I have to take it.
I have other
Exactly.
pressures on me, and that might even happen, or probably more than likely happens at a point in the evolution of the company where
Still early.
I was going to
Yes.
say you might be like kind of quote unquote like leaving a lot of the potential of the company and the growth
Yes.
opportunity in the market on the table, so to speak.
Exactly. That is exactly right. That's why some investors, when we launch it, we are the first direct secondary fund in Latin America, and at first, this was 2 years ago. It was like some investors were like, why? Like, why do entrepreneurs want some liquidity? Like they should be all in for the exit, right? And there were all these misconceptions around it, and it's like, hey, it's very healthy for the ecosystem to actually have these middle stops in between. It's like VCs, we have a portfolio. Entrepreneurs, they have their company. That's it.
Right.
You know?
Yeah.
So
That's
it's
life.
just like,
It's life and death.
exactly, it's life and death. So you are in this life and death situation for so long that at some point you're like, okay, I need to have my bases covered,
Yeah.
or I'm not gonna be able to make it in the long term. Right. And now,
Attom Capital's coming along and effectively, my words, not your marketing material, but like kind of saying like, hey, we know it's life and death. We can help you live that life a bit more healthy, a bit more effectively.
yes, exactly. That's
Yeah.
the point, right? How can we create that? And then the second reason is, which is specifically for Latin America. Latin America has been kind of like stagnant with external capital for a while. And when we were doing the research on why, it's not because there aren't incredible founders and huge problems to solve. It's because we haven't had that many exits in the last few years, right? And therefore the capital is stuck, right? And
Okay. Let's talk about that, right? Because that's I had a couple questions around that. You can tackle them all right now, right? So you talk in your material and on the website, in fact, like a lot about this kind of next, I'll call it like next layer. There's a part of me that wants to use the phrase trickle down, but that is a terrible phrase to use when talking about economics, right? We know that now. So let's just say like when you're empowering the founders and the entrepreneurs and the staff members and the early investors, as we've already discussed very plainly. But there's a layer to this that seems very important to you and
Yes.
your partners at Attom, that by empowering them, you're then empowering them to invest in the local broader entrepreneurial economy or ecosystem, as most people would call it. So
Yes.
let's talk about why that's so important.
That is the main reason why we launched Atom. Like Latin America has this huge potential, and if we wait for all the companies that the VCs have invested to do an exit, and therefore the LPs of those funds to reinvest in the ecosystem, it's going to be too late. We have too many things to do. We have too many big problems to solve. We needed to create some middle layers of capital, right? And when you create this middle layer of capital, it goes in many ways. When you provide it to funds, then funds provide money back to their LPs, and therefore their LPs reinvest back into the ecosystem. When you provide back to the angel goes back and reinvests in the ecosystem. Then when you provide to the founder, usually the founders first they make sure their bases are covered, but then they invest as angel in other founders. So it's like it's extremely positive circle which is generated with the secondary. And I remember when we were at the beginning of the process in Atom, I was talking to one of the first direct secondary investors in Australia, and like he was like telling me like, hey, this is great business and so on. But like the most beautiful thing is that the majority of the capital that you invest gets reinvested back into the ecosystem. So to me,
this is the ultimate in like sustainable capital.
exactly. That was like the turning point that was like, okay, we are in the right path, right?
We are so grateful to be supported by sponsors like our friends at Shore Capital. In today's venture capital world, it's not just about cash. It's about relationships. Capital is harder to find, limited investors have fewer managers that they can trust, and the industry is just filled with far too much hype. Shore Capital is an early stage venture fund investing in the world's most ruthlessly iterative founders, helping its limited partners to find founders who are solving the world's most dynamic problems, teams that excel in mastering the idea maze, teams moving with a rapid iterative velocity and demonstrating radical resourcefulness. Shore Capital doesn't just write checks though. They become fractional co-founders when needed, offering strategic support, high leverage relationship development, and a deep commitment to the long-term success of their portfolio companies. If you are a ruthlessly iterative founder with a bold vision or a limited investor seeking sustained access to the brightest big thinkers of our time, Shore Capital wants to meet you. So visit shorecapital.notion.site to learn more.
That to me then speaks so obviously about you and who you are and kind of like the types of people you always aligned yourself with and kind of the pursuits that I've watched you navigate over the course of this last 10 years, because you are all about the broader ecosystem. Like you're all about the entrepreneur in the most like kind of largest sense. While you're also fascinated by, a particular company, like you've to me, and this is again, just my perspective from the outside as like a fan, right, is you never seemed like some do. They become like super sector specific, and that's their love. It's what fires them up. They get excited to work in that category their entire career. You've always seemed in that sense maybe a bit more of a generalist as far as your interests. And
Yep.
now that you're telling me this, like this is kind of weaving it all together. It makes a lot of sense. Do this for us. Let's pull apart Attom. Let's go through and I'll hit you with kind of a bunch, and then we'll just keep back at them for a bit here. But let's talk about like the whole story behind Attom and how did it start? What brought you to join it? But then also like kind of let's talk about and if you can answer them, and I'll remind you what I'm asking you, so you don't have to remember all these questions. But like we can get into the business model. We can kind of talk about how it how it makes money and how it makes money for its LPs. And you just gave that great LP example in that story. But let's start first back at the top. Like, tell us the story of Attom, the origin story, and how did it all start?
So I hinted it a little bit with the previous conversation, right? So after investing for 10 years in the primary market directly into the companies, and then in parallel, I was investing as an angel. So I have several angel investments, and then I started exiting some of those positions in secondaries, right? So in the next round of
Okay.
capitals, there was some secondaries, and I start selling them there. And I was like, wow, this is quite nice, because like now I can take that capital and reinvest it back in other companies, right? So I've invested now, like over 30 companies, and that's all because it's being recycled, right? And I wait for an exit, and then I reinvest in others, right? It's like it's the gift that keeps on giving,
Wow.
and that's what gave me the idea, like, wow, this is quite nice. And then there was another thing that happened during that time. This was 2023, that I was seeing great companies, incredible companies, not able to raise their next round, because like a lot of Latin America depended on external capital, right? So US investors, European investors. And then when basically all the glorious time of 2021, hit the fan, right? They decided to focus on their regions and
Sure.
leaving Latin America completely unattended. And that meant that these incredible founders didn't have sources of capital available. And I've always been kind of like a problem fixer, right? I'm like, I try to there are things that I get obsessed, and I'm like, I need to fix this no matter what, right? So I started thinking on that, and then this happened with the angel positions, and I was like, okay, how can I tie this to? And I went deep into the research on secondaries. I started talking to like secondary investors across the world. I was lucky to have many of them, join us as our mentors and advisors. And researching, talking to entrepreneurs, talking to angels, talking to several people, and understanding where should we start, right? And the obvious answer was a direct secondary fund, right?
Fascinating.
And that's
By the way, very entrepreneurial of you, kind of solving your own problem, right?
yeah. I've always considered myself an entrepreneur, in nature.
Yeah, you are.
So I think that at the end is you can be an entrepreneur from different sides of the arena, right? But at the end of the day, is like, how can we fix this problem of liquidity in Latin America, and how can we help? Oh, I'm also always been very impatient. I'm not a patient person. So I think it ties back to that personality as well. I was like,
Right.
I was like kind of like projecting how much we would have to wait for, the
Yeah.
capital to recycle. I was like, no way. Like, we're
Well,
not going to wait that long,
as you alluded to earlier, right? Like in one of the prior answers, you clearly saw the risk, like you saw the market risks, right?
Yes,
You saw the macro market risks that would retard the development and progression of the Latin American ecosystem as a whole, right? And
exactly.
you're like, man, if we dally around and get into like year 25 of Latin American venture capital, like we could maybe never get out of that.
And especially like, I started seeing some part of the ecosystem waiting for someone else to fix it,
Sure.
and like, that's not my personality. I'm like, okay, if I can do something about it, I'll rather do something about it, right? And it turns out it's a great business, right? But like the main driver was like, how can we be this middle layer between, the start of a company and like the very end of a company?
Yeah. No. And also what a nice, it's so rare in business where we hyper focus in on like one thing and say, okay, that's our client, that's the profile of our user, et cetera. In your case, much like in my career in many different ways, like you've afforded yourself the flexibility of having kind of a wide ranging consumer / client base, right? Like you're serving purpose, like you have a bunch of different stakeholders that you can pitch to or
That
talk
is,
to about the
yes.
value proposition. Like you don't just only have to, like some of our poor emerging fund managers, like they just live inside the bubble of talking only to institutional LPs or
Yes.
massive fundaciones or whatever, right? And it's like, after doing that for 10 years, you probably lost your identity. But you get to wake up. Some days you're serving the founder. Some days you're serving angels. Some days you're serving LPs. Some days you're serving institutions. Some days you're serving the broadest part of the market.
Yeah.
That must be kind of fun. Like, it must make it interesting to wake up on a daily basis.
Yes, yeah. I mean, I think you nail it. Something that it's hard to understand about the way that we are doing secondaries, because there are different way of doing secondaries, but the way that we do secondaries is that we have to interact with all the different shareholders. You know, like we always ask the founders permission first, right? Sometimes they even tell us like who to buy, or even if it's to them, right? Or if it's someone of their employees to someone of their employees. But then we need to ask permission, to the board members and then to the other shareholders. So it's a smooth transition. And then also with the angel, knowing which angels are in which company. So it was interesting that kind of like I was in a very unique position in which I was a VC before, right? Therefore, I had the network of the VCs that were in the boards and stuff that helped a lot on the credibility, on the, on the how can we help kind of thing, right? Then the same with entrepreneurs, right? And then the angels, as I was an angel myself, I understood very well the pains and what I went through for each of the investments, in the good and the bads, right? So that allowed me to have kind of like an empathy towards the process. And then the other thing is like, it's a very emotional thing,
Sure.
like people don't think about this, but secondaries is incredibly emotional,
Interesting.
And,
Maybe more human, more personal.
very personal.
Because of the various triggers that you mentioned before that
Yes.
facilitate the interest in such a transaction.
Exactly. Like the founder needs to trust you. You're coming into their cap table, right? In a different way that what is done like always, right? Then the angels need to feel comfortable that it's the right time to sell for them, right? Maybe it's not, maybe it is, maybe, maybe you sell half, right? And then the funds, it's the same thing. Sometimes they are like, or should I sell, should I not? Because the companies are all doing well, right?
Sure.
So it's like, how do you get to that point in which it's a win-win situation for both of us, right?
That's amazing.
And like they are selling the right amount of their position, because sometimes people think, when they have to sell in, or they sell in secondaries, they think that they need to sell their entire position,
and that's not true.
That's not true.
Okay.
You can return your capital back, right?
Okay.
Like if you invested 100, and now it's like at 1 million. Get your 100 back, right? Or get 500 back, right? Like it's up to you, but like choose it in the right way. Sometimes some funds, like particularly very early stage funds that they are in fund 1 or fund 2 need some DPI, right? But it's a very good company, so you don't want to sell all the position, but you want to show your LPs that you can sell some, that it's actually real money.
Wow.
It's not something only on paper. So we do the math, right? How much do they need to sell to get to certain threshold on DPI, right? So it's a process that takes time. And that's the only point where I'm patient,
Yeah, yeah, but you're patient in the grand. I mean, you are in the spot, but in the grander sense, you're still impatient because again, you have an eye on the market. Yeah.
Yes.
All right. What's fascinating is I'm listening to you. Is it's the metaphor in my head that's running through. It's like the grease to the wheel. Right, like so if the
yes. Sorry, it took me a while to get the
no, it's okay. I was gonna thread it out for you because it was first of all, it's a very middle-aged American reference, right?
No, I got it perfectly.
But it's this idea, right? If the company or the company and the transactions from its investors
it literally
or multiple companies,
the entire wheel of the ecosystem. Yes,
it really does. I mean, it really sounds like an amazing lubricant that is seemingly good for everybody involved.
And I don't know why we didn't think about that before.
Right? Like,
You know,
so,
it's
okay,
like,
so that, like, let's get
yes,
into that. So now
yeah,
traditional private equity or venture capitalists, like the answer to the, like, how do you make your money question is, for those that don't know, is like they get paid, and I might misspeak here, but like they get paid like a management fee of some sort to like manage the money, the assets under their management. And that helps their daily, monthly, yearly expenses. And then they get, on top of that, they're essentially getting the carry or the long-term interest in the company. And that's a typical, like a certain percentage across the industry, et cetera, et cetera. So do those same types of norms apply here, or
same.
okay, so Attom is
So
by
fun.
a fund in
Yes,
that sense. And so the basic economics of it are the same.
exactly. It's the
Okay.
same. I always tell to people, we are a VC. The only difference is the way that we come in,
Interesting. Okay.
you know?
That's the old, like, so we're like Uber, but for this, right? So, it's like that. We have to make a generic comparison so everybody can understand it. But
No, no,
then
no. We are
we're gonna
literally a
explain
VC.
like why we're different.
No. We
It's
are literally,
you are actually event, like, so
we are
Attom is
literally a VC
technically like
though.
legally registered as a venture capital firm.
So it's an LP, but
Okay.
it's a
Interesting.
Delaware LP. But like, think about this way, Rob. So we're investing in venture, you know, in
Yep.
companies.
Yep.
We have a portfolio of companies, right? And we help the portfolio after we come in. What is the
So
difference?
yeah, you're a venture capital firm,
We
right?
are a venture capital.
You just didn't meet them like day one or day 10. You
Venture
met
capital
them.
don't need all of them on day one.
No, you met them in like year 2, and then instead of saying we bought in on your initial priced round,
Yes,
or
we
like we
came
came
in on
in
the side.
later. That we there's a side door at your office,
We came in the back door, you know,
right?
like
That's fascinating. Okay, so now we understand that. Like, I'm curious, you alluded to it earlier with the one great example, but like, let's talk about it a little bit more broadly now. Like, so how do LPs find this? Like, do they find this to be a really compelling place? LPs in your fund. So I'm going to give you money to go out and do these clever
yeah.
side door relationship purchases. Like, are LPs finding the secondary nature of your fund or any secondary fund to be very compelling?
So in the US, it's all the rave, right?
Okay,
Like all the
this is
LPs
the
are
thing. Okay.
only investing in secondaries, right?
Okay, there we go. We may have to make sure we put secondary in the title of this episode so everybody wants to listen
Exactly.
to it, right?
It's like all the rave right now,
Okay.
right? It's the highest numbers of investments in secondaries
Okay.
historically, you know, the amount of dry powder in secondaries, it's like insane. Um when I launched Attom, it was a bit different because like the LPs in Latin America, they didn't know what secondary was,
Right.
you know? So it's like, hey there, you know, like I'm coming with this new thing because I do think that it should exist in Latin America, right? And they're like, but what is it, right? And then it was like, why someone would sell if like the company is doing well?
Right. I was just gonna say that when you said that in the opening statement, when you made that allusion to the whole, like, you know, they
Yes.
should be focused on the company. Why are they giving up? That I read that to me. I was like, oh my God, that's such like the Latin American old model industrial machismo kind of like
Yeah.
take less money and get back to work kind of vibe. So, but and
Yeah.
also in fairness to like our audience that might not know, right? Like, venture capital, like this kind of technology, fast growth startup venture capital, is really only a thing in Latin America, like in the last 12 to 15 years. So
Yes.
like
It's quite recent.
a lot of the people that you're now coming along and meeting in like 2023 and explaining, hey, I've got something new. They're like, you just explained to me how this other thing
What was
new.
venture capital, you know? Now you're
Right.
coming with an extension to it. Like,
Right.
yes,
But that is really what's happening.
yes.
We are so grateful to be supported by sponsors like our friends at eSudo. You know, running any business, but especially a law firm, means balancing a lot. And technology, frankly, shouldn't be a headache. eSudo makes information technology and cybersecurity simple for law firms large or small. With over 20 years of experience, they specialize in everything from Microsoft 365 management to advanced cybersecurity solutions. They help you to stay ahead of threats, manage your data securely, and keep your tech running smoothly so that you can focus on what matters most, your clients. ePseudo understands the legal industry's unique needs, offering tailored solutions to ensure that your firm is always in compliance and always protected. Are you ready to upgrade your firm's technology or get help with your questions? Visit ePseudo.com.
Yeah, so we did like an entire year of education, right? Like we still do. And as you mentioned, you have read a couple of our articles. We try to be very active in events, we try to write a lot on secondaries. We try to do a lot of educations. We go to, universities. We even do classes to startups, on about
Hey, that's
ESO.
awesome.
Employees can understand what it means, right? So some employees reach us and they are like, hey, can you come and talk to our employees and like explain to them what does it mean? Because like at some point there was this moment in time in Latin America that employees were like, why would I get shares? Like I'd rather have
Sure. Yeah.
profit,
No, of
you
course.
know?
Right. Yeah.
Like we have done a pretty consistent work of educating, and I
That's
think right now
fantastic.
it's obvious, right? Like everyone sees it and so on, but it wasn't obvious like 2 years and a half, right? So when we started, it wasn't that easy.
No,
I
I would
enjoyed it
imagine.
though, right? I had quite a good time, and I had a lot of conviction in what we were doing, so it was fine. But many tried in between, and they just like let it go because it was hard.
Because it's hard. No, very few people like to work at a hard thing. I'm curious. You just teased a thought in my head. Like, so deal flow wise, is it entrepreneurs and founders who find you, or are you guys out there finding or targeting companies that you would like to offer
So
this type of investment to?
it's more of the second. It's
Okay.
more that we go to their companies, and
Okay.
but many times the founders come as well to come to us as well, right? So it's a combination of the two. Sometimes it's through an angel, sometimes it's through an employee, and then we go and reach the founder. It's like it can go. It's very very flexible. There is no one way of doing this.
I love that. That's also got to be part of the fun.
Yes, I'm having fun.
Yeah, I mean, because like literally, like kind of a new angle slash slightly different sales pitch slash slightly
Yes.
different application of the tool, depending on the day or the investment being monetized or the company being dealt with
And
and
understanding who you're
processed.
talking to, what
Yeah,
are their expectations, what part of life they are. You need to try to say the right thing so it clicks, and it makes sense, right? And they want to partner with you, or they want to like provide get some liquidity, right?
no, that's fascinating. And again, over time, right, like deal after deal, year after year, you guys become essentially experts because you're able to recognize those patterns. You're able to, it's the difference between me in year 2 of my career and year 10 of my career. All of a sudden you start to be able to like, I can speak to these different audiences, right? Because
Yes.
I understand the 6 different profiles of the people we're dealing with. And then by nature of that, you become known as greater expert in the space. And now all of a sudden more people are seeking your advice and input, and that leads to more deal flow. Good for you. How exciting. I honestly, and I say this like completely transparently, I was not lying when I said like I knew of the terminology and I understood kind of in the broadest sense what this was in the marketplace. But I've never in the last 5, 6, 7, 10 years as it has grown, even here in the US, like I've never like slowed down to say, yeah, you know what, this weekend I'm going to read up on it. Like I just never have. And then in the last couple of months, I started thinking, wait, if I could have a conversation with Antonia, I bet she could be basically my reading and she could help me understand this. And it is now fascinating me because it
No.
seems like just, and in an ironic way as well, right? Because while the market has, like the broader capital market, private capital market has remained stagnated
Mhm.
and or static in this last handful of years, in a weird way, while that probably creates some obstacles for you to overcome, the reality is actually maybe, if I'm interpreting it correctly, in a broader sense, it's actually a good thing for you,
It's an opportunity.
right? Like,
Yes.
I mean, so you have essentially a counter-cyclical business.
So that's it. That's an excellent point. And I reminded myself every day of that when we were fundraising the fund, because
Yeah.
like it was a horrible time to fundraise.
Right.
It was
That's the obstacle
incredible
that
time to
existed.
invest,
Right.
So now that we're not fundraising and that we are only investing, it's like I am very, very happy, right?
Yeah.
Um,
And it's not like, in the stock markety sense, right? It's not like you're a firm that just shorts everything and therefore
yes,
you want to see the world in turmoil and collapse and all that because it'll benefit you selfishly. It's
no,
not that, but
yeah,
there is a practical reality that like capital markets, even more so,
and
tell me what you think.
yeah.
Even more than just like they're stagnant right now. I happen to believe, I think we will look back. I just said this to someone this morning in an unrelated topic. Like, I think we will look back in the early 2030s and we will realize that the 2020s, both pandemic and then coming from an American perspective, I apologize for this, but like the Trumpian nature of the 2020s and the pandemic, we will look back and realize that like on a global basis, socioculturally, economically, industrially, geopolitically, et cetera, the 2020s are going to have been known as like an era, a decade of transition. And so in that sense, like you're not wanting the world to be bad and no capital to loosen up, but you are saying like there's always going to be a world of uncertainty and there's always going to be capital risk and geopolitical risk in different regions.
Mhm.
And you guys have discovered a way that you can like, you've built a business that isn't dependent on just up and to the right hype cycles.
So, um, I like the way you're thinking, and in that line, I think that we are we tend to look at the bad things, we tend to focus on what's wrong, right? And I remember talking to several entrepreneurs and investors in 2022 and 2023, and they were like, it's so hard to fundraise, the environment is so wrong, and et cetera, et cetera. And I was like, it was definitely harder in 2018. It was definitely harder in 2016. It was definitely harder in 2012. Like it actually gets better every
Right.
year with
Right.
the exception of 2021, So that was an exception.
Yep.
And that's what people miss. So it's not that we're taking advantage of like doom events and stuff. No.
Mm.
It's like we're being realistic.
Yep.
This is the base ground. You need to build an incredible company, a good, sustainable company. And now it's the time to build it. In 2021, it was very hard time as an investor, to really understand the fundamentals of a business because like the products were subsidized.
Yeah. Yeah.
Rob, how can you analyze,
2021 for your generation, and you're probably only a little bit older than my daughter. Like 2021 for your generation was my generation's 1998 to 2001. Like the bubble of Internet 1.0
yeah, Burset, yes.
was just you had bubble number 2.
Yeah,
2.0, but it was that the fundament, there were no fundamentals, it was all hypes. But again, like here's what I'm discerning from this, which is very, very exciting. Sorry, go ahead, please.
Let me finish the idea.
Yeah.
So the point I was trying to make is that like it always in cycles, like, right? And then sometimes there are some investors like freaked out in these cycles, and they are extremely bad for the ecosystem and for the entrepreneurs, because they start putting pressure on the entrepreneur. They start like in the bad times, that's when you see the real faces of people. That's when some investors forget it's a cycle, and sometimes there are bad times that come, and like that doesn't mean you're gonna be dead. That just means that you need to overcome that and see how you need to change stuff within your organization, and like reborn in some way or in the most extreme way, right? And then like be back better and faster and stronger. But there are some investors that don't have the patience for that, and we are there to take them out.
No, I love that. Again, like it's the dream business. My dad used to say, like, come up with a business that you could sell ice cream in the summer and you could sell snow shovels in the winter. Right? I mean, that's the dream, right? Is like a business that is that, and you have that kind of flexibility as you are, and it has helped that you have, and we're going to talk about Latin America here in a bit. Like it's helped that you've come along at a time where the industry of capital has evolved to such a point that secondaries is now kind of a mainstream American European thing, and now you're making it a mainstream thing in the rest of the Americas, and that's great for you as well, because then that means is you're always going to be useful. There is a utility to secondary offerings through the bad times and through the good times for
Yes.
all those different constituents, and maybe at different moments in different parts of the cycle you described, it
That
will
is
be
exactly right.
it will be different persons, different clients that will step forward and be the more right now, okay, we're dealing with more angels and funds. Oh, right now we're dealing with more founders. Like, but that's amazing. I mean, what a wow, good for you and your partners and for the investors in you who have bet on you and bet on this.
I am so grateful to them. I
Yeah,
think that
of
many of
course.
them invested in me just because they invested in me before, and thank God they did well. And they
Yeah,
were like, "Okay, Antonia, I'm not sure what you're doing, but like, okay, we bet on you." And I'm like, "Okay, thank God we're well." And like, it's proving to be right.
yeah.
But
No,
when
it's
they
good.
invested, it was like they betted on us. So I'm very grateful to them.
Yes, no, and you will deliver them returns many times over, both on their balance sheets and in their relationships. We know that for sure. All right, so a couple questions. Well, this one should be pretty easy because it seems like it's fairly obvious answer already. Is there any secondary capital market like other firms like you guys in Latin America now, or is it you guys?
So it's in Hispanic Latin America, it's only us. In
Wow.
Brazil, there is one player that raised a fund, I think like a month ago.
Okay.
So we'll see
Yeah,
when
we'll check back in 6 months and see if they're still a player. Okay, so in
exactly.
Spanish-speaking Latin America, it is Attom Capital
Yeah,
doing
yeah.
these deals.
And
That's
for
it.
2 years, it was just us. We were the only player in the entire Latin America. We're actually making our first investment in Brazil. We just made it like 2 weeks ago, so we will be announcing it soon. But it's there is enormous need for secondaries in Latin
Yeah.
America.
And
Enormous need.
and I would imagine the setting the competition aside as a metric, you're a smart enough business operator to know, like, obviously, a robust market of alternatives would be great for everybody,
Yes,
right?
exactly.
Like Attom Capital can't possibly do all the deals,
Yes,
and that means that there are wheels in different ecosystems that are squeaking and aren't getting any grease,
yes,
to pull our favorite metaphor back out again, right?
yes,
And so obviously it would become a validational thing for you to be like, hey, we're the leaders, and we were the persons to put the flag in the marketplace.
yeah. But we
But
hope to have more players.
right,
Yes,
but look at around us, because then now
yes.
it's making all the rave here in Latin America as it is in the US. That's amazing.
So what we have seen though,
Yeah,
what we have
please.
seen is some family offices and some primary funds do some secondaries, right? So that there
Okay,
is
kind of like
definitely an uptick.
one-offs, like on their own.
Exactly, like one off, and like many of them calling us like, "Hey, I want to do a secondary in this company. Like, what do you think?" We have done actually investments with them, like, "Hey, yeah, I think it's a great company. Let's do it together." And that has worked quite nicely. But like as a pure secondary player,
Yeah,
we haven't seen, yet.
amazing.
And I think we will start to see more. Something that we've tried to do is like to bring more of the global players to Latin America as well.
Good.
So that's also something that we are working on hard.
Oh, I love that. And that kind of brings us to our last question or two here. Talk to me just about Latin America, right? We've known each other effectively, essentially, kind of over a decade, right? We have there's a Chilean part of us, and I still talk to people in Chile on a regular basis. I still have great friends. We had not too long ago. We had Rosia Fonseca,
Wow, nice.
on the show. Yeah, she was on the show talking
I
about
wanna hear that show.
talking about, I'll send you the link, talking about Dre Ventures, her firm that she's doing with the two other women. And then
Yes.
actually I'll tip, if anybody's listening now, they're going to get a little preview here. At some point in the next couple months, we're going to have Rocio and her husband, my buddy Pablo, we're going to have them back on the show because they are writing a book
Ooh, quite
about their
nice.
experiences and about the experiences bridging the U.S. and Chile and the U.S. and Latin America. So
Nice.
we'll have them back on the show to launch their book. But so we've got a history, and then obviously you worked in Mexico. You worked with some people that I have a ton of respect for, and who are big friends and supporters of the show. Talk to me. Just, I'm not in it every day like you are anymore, right? Talk to me about, like, how do you see Latin America and the Latin American entrepreneurial economy beyond what we've already discussed? Like, how do you see it evolving? Is it good? Is it bad? Like, what's going on right now?
I'm an optimist by nature, Rob. So I'm always going to like talk about the bright side, and like the good side, because I will always see opportunities there. Um, so I think Latin America, we're starting to realize that we need to make our own path, right? We used to look so much to the US. And even in the way that we invested, in the way that we made decisions, then the reality is that Latin America is quite different to the United States, particularly in the depth of market, in the like penetration of technology, in the way that things work and so on. And so now we are starting to realize that and finding new paths to liquidity. I'm starting to see a lot of roll-ups coming up, like within Latin America, different ways of leveraging, the public market, the local public market. And I think that's something that I'm very excited to see, because like that's the natural evolution of the ecosystem,
Yeah.
right? When you start seeing kind of like the ecosystem put the first grounds to stand on their own feet, and that's beautiful. And then on the entrepreneurial side, it's the excess capital is gone,
Okay.
so
Yeah.
we're back to fundamentals. And again, like a product needs to sell, profitably from the get-go.
Yeah.
And it's possible today, right? So the companies that we're seeing, it's just like insane. And there was a point in time, and I don't know if you saw it closely in Latin America in 2022 and 2023, where everyone was like guessing, like all these companies were going to die.
Yeah. Right. Sure. Yeah.
Not only not die, but they have become profitable and
That's
like
great.
grown. It's
That's
insane. It's
awesome.
like the amount of resilience and like
But again, like falling back into, as you've said, to emphasize this point for you, like falling back into kind of what makes Latin America and
unique.
what makes Latin Americans Latin Americans, which
Exactly.
is a fighter's instinct, is a
Resilient.
grittiness, is a
Yes.
resilience,
We're
is
used to
a
problems
yeah,
all the time. And
solving
yes,
industrial infrastructure problems in your day-to-day lives.
yes. And
That's
politics collapsing everywhere.
yeah, understanding all of that,
And
right?
you
Like
move
being
on.
I mean, I've joked for years and years and years, right? Like, people are like, I would say like Argentinians or ironically, in my humble opinion, like Argentinians and Venezuelans are some of the best salespeople in Latin America, right?
Yes.
Just naturally born salespeople. And people would always ask me like, why do you think that is, Rob, based on your decades and decades of experience? And I'm like, because literally look at the environments that they grew up in, that they
Yeah.
were surrounded, the instability they were surrounded by on a daily basis, essentially for decades,
Got to
has
survive.
forced people to have to figure out a way to, I'm going to make something and sell it to you so you can give me some money for it so I can eat. Right.
Yes.
Like, and that in an exaggerated fashion, but like that is a fundamental. Are there any, you mentioned like some stories of these, are there any industries that you see right now that are, and please, if we can just not say AI, that'd be great. But like, if there are any industries that people aren't thinking about that you're seeing emerging, or solution sectors that you're seeing emerging in Latin America that would be interesting?
We are so grateful to be supported by sponsors like our friends at Plaintext Capital. You know, investing in Web3 and cryptocurrencies isn't about jumping on the latest trends. It's about understanding where the market is headed and why. Plaintext Capital is a digital asset investment firm focused on long-term strategies backed by deep research, backing the best Web3 companies and protocols, and investing in the newest asset classes of the future. They believe that Web3 crypto will drive digital innovation for decades to come, creating significant value for investors. In fact, their team of highly skilled professionals work with institutions and serious individual investors who want clarity in a space full of hype and noise. So if you're looking to cut through the chaos and invest with purpose, Plaintext Capital brings a disciplined, high-conviction approach to investing. You can learn more and meet the team at plaintextcapital.com.
I mean, we focus on fintech. We are a mostly fintech fund, So I think that's the area that I want. I mean,
And that is continuing to emerge. Like that wasn't just a hype cycle thing back
it
in
wasn't
the.
a hype cycle. It
Okay.
wasn't a hype cycle. And we're seeing some fintech companies like get to certain sizes that it's just incredible in a short amount of time with very strong economics and fundamentals, and that creates a virtuous cycle,
Yeah.
because people weren't able to access financial services before, or the payment rails, or more tools to entrepreneurs, like when it's like SMB services. So Latin America is all about, like building the foundation for what's needed in the economy. It's not like you're
Yeah.
making an email faster.
No, yeah, it's not the nice to have stuff. It's
Not the
the.
nice to have stuff. Exactly.
Yeah.
So it's like, and it will continue being so for several years ahead,
Okay.
because like we still have those problems. It's huge problems that we need to fix. Huge problems.
Yeah.
So like a company doing like certain size, still they have enormous size to grow, because like the problem is so big, and like that's only in Mexico, or that's only in Brazil, or that's only in Colombia. So like the trend is going to continue being like that, right? Maybe the difference, and then it's hard not to talk about AI, right? Because like it's a reality what's going on, right? But that's a change within companies in the way they are operating, right? Like if you can use more AI and therefore provide a more customized service or a better product at a better price to a customer that wasn't able to pay your service before,
Yep.
that's great. I mean,
that's and I'm biased in this way. I'm not. I don't even hide it. Like AI is a great tool. Like AI, not as a replacement of humankind, but as a great
yes.
tool, right? Like that's what it should be. That's what software was. That's what middleware was. That's what hardware was. Like I've lived through technology since 1994, and every time the best applications and the greatest outcomes were from uses of it as an enhancement or an accelerant or an additive to some existing problem or solution. And
Yeah.
I think AI will be exactly that. It's two last questions. We're going to be respectful of your time. We got to get you out of here in a few minutes. But one quick anecdote that I bet you'll love is this is maybe 6 months ago or so. So like latter part of last year, I had the good fortune to have one of the two dynamic young women behind the financial company from Mexico called Vexi.
Okay.
VEXI, and I had Gabriela Estrada on the show, and that whole conversation was like this walking example of what you just articulated, right? It's like Vexi is a very much an unsexy, very fundamental part of the financing, banking sector. And yet it is addressing a massive need and therefore massive opportunity, and one that flows outward into stimulating the rest of the economy.
Yes.
And I teased her. I must have said it 100 times while we were talking. Like here, she's this very talented, probably I don't know, 40-ish, very experienced, like worked in traditional banking for her entire career and saw the problem, right? And I'm like this old man, and I just kept saying like, you're solving like a problem that's been around since I've been alive. Like you're solving a problem that was like a problem in the U.S. and then eventually it wasn't a problem in the U.S. over decades, and now it was a problem in Latin America, and now you're making it not a problem in Latin America, and it'll take you decades. But that means your company is going to be relevant for decades.
Yes, that is exactly it.
Which is so awesome to hear that. I love those stories. Two last questions, and then we'll get you out of here. The one is, and this is just personal, this is just me. When we first met and when we kind of came across each other, these are my words, not yours. Like you were one of the small number of very bright up and coming women who were in those days being given an opportunity, right? While you also were trying to seize an opportunity, oftentimes kind of against the bulwark of, and again, these are my words, not yours, like kind of this machismo operating system that exists in Latin America that once we do business there, we all understand very, very candidly. I know that just anecdotally from the outside world, the profile seems to have changed in venture capital for sure. But has it changed as much as I think it has in Latin America, or is it changing? Are we seeing more women like yourself rising to the point of being the capital allocators and the decision makers?
So I think on the side of the investment, I think it has changed. I think that there is way more women in the ecosystem of the investors. What I've been a bit concerned is on the founders side, and like some companies that had a female women founder, that women has left the company, you know, and I think that we need to do more as an ecosystem to retain them. You know,
So do you
there
feel like we had like kind of a burst of entry of women founders and women companies and all, and then maybe it retreated to some degree, and now
It's
we're
a
back at
quiet thing. It's a quiet
uh,
thing. But when you
uh,
start like doing one by one, you start realizing this is true, And and that gets me concerned,
sure. No,
because like
me too.
yeah, we were advancing, at least superficially, right? The question is how much real power did they have, you know? And that's what behind the scenes. And I hope these women leave those companies to fund new companies.
Right.
And I'm
Yeah.
like that's what I'm waiting to see, right?
Sure.
And that's like the second wave of serial entrepreneurs of women,
Yeah.
right?
And
And
maybe
now
in
according to their rules,
and
right?
maybe, and which, by the way, the world desperately needs. That's my words again. As an ally and a girl dad, and a future girl grandpa, like let me just say, the world definitely needs more women in capacity of leadership across the board. But it's interesting is maybe to put a fine point on this, your work is directly going to impact that because in
Hopefully.
circumstances where secondary offerings can afford maybe female employees or female executives the opportunity to come out of a company and then maybe that
That's
capital,
the thing. I'm the one buying their shares right now.
right?
Like I hope they use it to
Right. And that can only have either a direct impact or a tangential impact because they will see you as an example. And that's very inspiring.
I'm gonna be tangential, but at least I provided some liquidity so they could, take a break and then take the risk of
Right.
starting a new company, right?
No, I love that.
That's what I want to see,
And
right?
thank you for that too, because that's an insight and a perspective that I've not heard lately. And so I'm grateful to know because now I'm going to double down and use our show to highlight some stories in some ways back in Latin America that are going to try and maybe
That would be
also
amazing. That
also
would be
affect this.
amazing.
So yeah, no,
Yeah.
thank you for sharing that. All right, last question. And this question is a little bit different vibe than our conversation that we've had so far, which has been amazing. Thank you. But this question is more like kind of actionable takeaway bullet points, right? So one question, if there's an entrepreneur or a founder listening today
Mhm.
and either they've been thinking about it but they didn't know enough about it, or now they've been listening today and they're like, oh my gosh, it sounds like this direct secondary investment thing is what I need in my company to alleviate some of my stress or to help offload that crazy negative angel that's been haranguing me for the last 2 years. What are the first two or three, you take it any way you like, two or three kind of concrete things or concrete steps or questions they should ask themselves today
Mhm.
to evaluate this as a possibility for them?
So the first, and being very realistic here, is what's the stage of the company, right? And I've been approached by founders that launched their company 2 years ago, and they raised a seed, and then they hear about the concept of secondaries, and they're like, "Oh, this is nice." They are still like far behind.
Okay, good to know.
It needs to get a larger size in order for secondaries to exist, right? Like we invest post Series A up to Series C, and we are the earliest. Like secondary funds in the US, they invest
Even
pre-IPO.
later. Okay.
Like
Yeah.
Series C, Series D, Series E onwards. So it's like think about that first, right? What's the stage that you are? Then how much ownership do you have? Right. Sometimes you don't have that much ownership, and like selling some of your ownership doesn't make that much sense. Right. So it's like, how much ownership do you have and how much are you going to be left afterwards? Right. So that oftentimes in a good company, that's not a problem. Right. But I'm just like enumerating the things that you
Yeah.
need to
Yeah.
do and think. Then the third thing is, can I sell to someone from the inside? Like the easiest, especially in Latin America right now, we're the basically the only ones that you can reach out.
Right.
You
Yeah.
know, like we cannot make all the investments, right? So you need to think more creatively on who can take those secondaries. And then the immediate question
Internally, like, so hey, there's this
internally.
existing investor who I know is a big supporter, da da da
Exactly.
da. Will she or he maybe take on this,
Yes.
which will lead you to, okay, that's
Yes.
fascinating. That's
And
great.
then the third and the fourth are very tied together, which is how do you have that conversation? You need to find the right time. You know, like this is not a conversation that you can have like a transactional conversation with your investors. You know,
Don't text from the back of the Uber
don't text.
with this idea for the first time.
Exactly. And like I always tell founders, like, see if they are in a good mood, you know?
Right. Yeah,
You know,
exactly.
like take your time. I always tell them, like, take your time, and then like because we always ask permission, right? And then take your time on talking to them, tell them about us, tell them about who we are, you know, how we can be helpful, right? Because like you always have to think that a secondary can be just liquidity or can be someone new in your cap table that can help you move forward, you know, and it's a great way of
Love
partnering
that.
with someone new without getting any dilution, you know? So,
Amazing.
so it's like find the right time. Hopefully they are in a good mood, you know, and they are going to be empathetic towards your situation or why or the reasons why you're doing it.
Yeah.
And just considering this kind of like emotional aspect to secondaries, you know.
I love
So
that.
so
I
yeah,
love it.
I think I'm sure I'm missing some things, but like
I don't
I
think you
think
are.
first,
I mean, honestly, like as you do for your LPs, and as I've always known you to do in your career, you just over delivered on the answer. Like I asked you for 2 to 3, and you've just given us like 5, which is fantastic. But you also said this is in your wheelhouse. Like you guys are educating your market. You're educating the public that is
we're
your
trying
market.
to educate, you know,
And
that's your
we just
goal.
did it. We just did a mini masterclass in here are the 5 steps that you need to contemplate if you're going to consider a direct offering in your company. And to your earlier point, and the whole theme of this conversation, which thank you has been hugely
Thank you,
educating
Hugo.
and very illuminating, aside from just purely enjoyable as a human. Thank you for spending the hour with me. But also, right, you take it back to the very beginning. You said, and this is what I love, and you just said it again in your answer there in part number 3. This is the opportunity for a company, a founder, an entrepreneur, a team, and employees, angel investors, funds to contemplate leveraging direct secondary offerings in their matrix of how they're going to manage the capital that's related to the business is equal parts strategic and very human and personal.
Yes.
And that is that is probably my biggest takeaway today is like what a fascinating kind of meeting, a kind of what a place to meet in business. Because right, I'm a huge advocate. It's the thesis behind this podcast is that, you know, the only way we really get to know each other and we actually really solve our real complex problems or seize our biggest opportunities is when we actually have long conversations with each other. And I think far too often in business, anywhere, not Latin America specific, but anywhere in business, right? Especially in today's world, 2026 world, we've commodified so much of what we do into being so transactional that we have lost, in some senses, our humanity. And so, to me, there's a beautiful underbelly of this whole secondary offerings. Why don't we do IPOs conversation anymore today that I didn't expect, but I'm really gratified for. To learn, because that I can't think of this is my words, like I can't think of a kinder, smarter, more empathetic person than someone like yourself to help your constituents to navigate through something that is both so financially strategic and important and sensitive, but is also just human.
Yeah. So
So
not all the secondaries are like us, right?
no, of
So
course
I
not.
just have to
No, no,
say
no, no,
because
no.
like I've sold
Yeah,
this
but
side
you're
of secondaries, but I think we're quite unique within the secondary players, you know?
and that, my friend, thank you. You just handed me the punchline of the conversation, right? That is why you are ultimately an entrepreneurial thinker, right? Because you have seized a market reality that existed. It didn't exist in your neighborhood, but it existed in the larger world, and you have brought the uniqueness that is Antonia Rojas to that market, and you're doing it your way. And frankly, I think my view is you're lighting a path for other people, like-minded, like-spirited backgrounds, similar experiences. Like you're lighting a path for people to say, there's a better, more thoughtful way to do secondary markets going forward over the next 25 years of this world we live in. And that's a good thing. That leads us to eventually leaving this world a better place. Very quickly before we go, how do we find Attom or sign up or go to your website or follow you on Instagram, whatever you want people to do? Like, let's mention it now.
Yeah, so you can go to our webpage, attomcapital.com with double T. You can reach us in LinkedIn. I think that's the easiest, and we look it very often, and I tend to be very responsive. So that's
awesome.
The best way of reaching out.
And we will put all this into the show notes so everybody can click on it and find it there too. Antonia, I'd give you a big I'd give you a big hug if I could reach the screen and give you a hug.
Give you a virtual hug.
Thank you. It's been fantastic. I really, really appreciate your time and all the insights. Amazing conversation.
I appreciate it. Thank you for the invitation. Talk soon.
My
Bye.
pleasure. Thank you.
Well, I hope you enjoyed that episode as much as I did recording it. As always, we thank you so much for listening and watching. Today's show was recorded here in Los Angeles and produced by the incomparable Deanna Bernal in Mexico City. You know, we can only grow this show by you listening and sharing the show with friends. So please find, like, follow, subscribe, and share our audio-only show on Spotify, Apple, or via any other popular podcasting platforms, as well as find the video version of our show now available on our YouTube channel over at Entrepreneurial Thinkers. And of course, you can follow along on our various social media platforms for fun and informative clips and content at Entrepreneurial Thinkers, wherever you can find us. And if you'd like to connect with me, you can find me at I Am Rob Ryan on just about any social media platform. Gracias, thank you, and have an awesome day.